Hi there, Holly Shields here for Kalkine Media. What is a failure to deliver? Let's break it down. But before we get into it, please sub to our channel, and while you're at it, press that bell icon to stay ahead of the game. If a buyer fails to pay owing funds before the settlement date, or if a seller fails to deliver securities in trading, the transaction is considered a failure. This happens when a stockbroker fails to receive or deliver securities within a specific time after a security buy or sale through a stock exchange. Both parties to a transaction are contractually bound to transfer assets or money before the settlement date in trading. If the transaction is not completed within a certain period, one party will be considered to have failed to deliver. It can happen if there is a technical issue with the clearinghouse's settlement process. Companies currently have 1 to 3 days following the trade date to complete payments, based on the market. Securities and cash should be handed out to the clearinghouse for settlement. If firms are not able to reach this target within this period, they will fail. Different settlement requirements apply to fixed income instruments, options, stocks, and futures contracts. However, when a bank cannot pay its debts to other banks, it's referred to as failing. The failure of one bank to pay its debts to another bank can cause a domino effect, resulting in the insolvency of multiple banks. So what are the categories of failed trades? Well, unsettled deals can be divided into 2 categories. One is when the seller fails to deliver the securities by a specific date, and the other is when the purchaser fails to pay the settlement by the date. Shortfall. A shortfall occurs when a seller is not able to deliver securities by the settlement date. Longfall. The term long fail refers to when a buyer cannot pay the money by the settlement deadline. So what are the causes of failed trades? Well, when a buyer or seller is unable to pay their trading commitments on time or before the settlement date, the trade is considered a failure, and this has ramifications, as a failure to deliver securities or cash to one's trade side can result in fines, financial losses, and harm to one's reputation. And it will not end there. If they do not fulfill their trading responsibilities, rating agencies may lower their credit score, restricting their capacity to shop for the finest counterparty agreements. Basically, trades fail for various reasons. Before the settlement date, manual trading processes cause delays and errors in verifying, affirming, or matching trades. The seller lacks the necessary securities to deliver and must either borrow or purchase securities to do so. The buyer does not have enough funds to make a transaction, such as credit or cash, instructions that do not match, instructions that are not delivered on time, or instructions that aren't delivered at all. When vendors and purchasers argue over what should be offered and whether the delivered item satisfies the agreed upon specifications, it may be a messy situation. Funding and inventory problems with investment assets. Automated systems that are unable to interface with the reconciliation process and produce reliable data. Both the buyer and the seller may face a variety of challenges. So what are the consequences of failed trades? Well, when a trade fails, the consequences might include everything from risks and operational expenses to reputational harm and strained relationships with counterparties. Failing to pay for purchases could tarnish the buyer's reputation, limiting the buyer's future trading opportunities. Failure to deliver also taints the seller's reputation and may restrict how and with whom they can do business with in future. Moreover, failure to produce the security and make payments may demand compensation for opportunity costs on the deal value until a settlement is reached. Well, now that you're up to speed, check out some of our other videos to learn more on the basics. And if you like this info, please give us a like, comment, and a share. For regular updates and information, log on to our website at kalkinemedia.com. This has been Holly Shields for Kalkine Media.